Welcome to Blog Talk Radio in high fidelity.
So hey everybody, welcome to April. It's almost the end of tax season. So for those of you who are doing tax, I just want to say home stretch, people. Couple more days, 5 more days, and you guys are good to go. This is the QBOShow. It is April 12th, 2018. My name is Stacy Kildall. I own and operate Kildall Services LLC, located in White Lake, Michigan, or what I refer to as the Enchanted Mitten. To give you an idea of what's happening here, woke up yesterday morning with about 1.5 inches of snow on the ground. Today it was 73. It's glorious Michigan weather. So anyway, I just want to say Woody is off today. My co-host Woody is off today. He will be back in 2 weeks. Our show is the second and fourth Wednesday of every month. We have a guest today who's been on quite often, Joe Woodard. He was on last month talking about Scaling New Heights and the Chapter 11 that Woodard Events LLC, which is the company that manages Scaling New Heights, the Chapter 11 they filed. I've asked him to come back on just to, there's been some contradictions that a lot of people have noticed and brought to my attention. So we have a lot to cover today. The chat is open. You may have to refresh the page. Richard is going to be manning the chat and giving me a heads up. Richard Ropa, he does all our app questionnaires. Before we start, I want to mention our sponsor. Our sponsor is neat.com. Pretty cool stuff. I'm sure you guys have heard of Neat Receipts. I know that I listen to Sirius Radio and I hear a lot of Neat commercials, and so we're glad to have them on board as a sponsor. They're really amazing to work with. If you want a little bit more information about them, if you go to QBOShow.com, over on the right-hand side, the right column, you'll see a link, and if you click on that, it'll take you right to the accountant partner page. So please make sure you check out neat.com and use the link on our page. So I'm going to go ahead and I'm going to bring Joe right in. If you guys just hang on, there might be a little bit of dead space. I just want to make sure this number is him, so I'll be right back. Hey, Joe, is this you? Okay, so Woody is gone, so I have to screen the caller. So Joe is on. So Joe Woodard, how you doing? You here?
I'm doing great, Stacy. How are you? Yes, I'm here.
You know, living the dream is all I can say. Just hanging in there. So I want to thank you for coming on again. I really appreciate that. Yep, I want to thank you for coming on the show. I really appreciate it. Yep, and we really, really appreciate you coming on. There have been a lot of questions since the last, a lot of stuff, a lot of emails, a lot of meetings, a lot of interviews, a lot of stuff coming on CPA Practice Advisor, some follow-up that we've had. But I want to start out with just some of the logistics about the conference. So for those of you who are listening, Scaling New Heights is happening this June. I believe Sunday is the 16th, and that's when it actually is. That pre-conference stuff, and then the conference kicks in on the 17th, or is it? Okay. So goes
full conference.
3 days.
Full conference. Excuse me. Let me change to the question. Full conference starts on 1 o'clock on Sunday, June 17th, and it runs until 6 o'clock on Wednesday, June the 20th.
Nice. Okay. So yep, great. That clears things up. So before, Sunday was always pre-conference and extra, and now it's not. It's just included in part of it. I know that was one of the changes that you made, I think either last year or this year, because a lot of the stuff that you guys would do on Sunday would be extra outside of the registration, and you did away with that, right? So now conference actually starts on Sunday, and everything that's happening on Sunday is included in the regular registration. Is that correct?
That is correct. It's all one price.
All right, cool. Okay, so just some logistics. I want to start out with some logistics. So you are having it at what's the name of it? I just know GWCC, and I can never remember the name. So is that the Georgia?
Yes, it's the Georgia World Congress Center. It's in downtown Atlanta. right at the heart of the downtown attractions like Centennial Park, Olympic Centennial Park, where you have the famous Atlanta fountains. You've got the Ferris wheel, which all the major cities are getting their own Ferris wheel these days. At the CNN Center that does the CNN tours, World Coke, the College Football Hall of Fame, and our brand new Mercedes Stadium are all right there in that area of Centennial Olympic Park where we'll be hosting it. And the Georgia World Congress Center is right there.
Okay, so this place is huge because you guys, this is where the Atlanta Auto Show is taking place basically right before. I think it ends a couple days before Scaling New Heights, correct? Or maybe it's happening right now. All I know is that the auto show is here. And usually in a place that's having an auto show, I know here when we have the Detroit Auto Show, it's at QBO, and QBO is a giant, huge convention center. So this place is pretty large. One of the questions that a lot of people are asking is where within the Georgia World, I'm just going to call it the GWCC, where in the facility is it happening? Like how deep into the buildings are people people going to have to go to get to their sessions? And secondarily,
yes,
will all of the sessions be in that same area?
All right, great. I'm happy to answer that question. And yes, it is the third. It depends which website you're looking at. If it's the third or fourth largest convention center in the United States, it has just over 6 million square feet. Obviously, we will not be using all of that. But in the wisdom of the designers, they divided it into 3 different buildings that are connected with concourses. So if I have an event like Comic-Con or Dragon Con, or maybe the auto show if it's large enough, and I want to use all 6 million square feet, I'm inside of a single contained space. But the original building that was built, Building A, is not only directly connected to the Omni Hotel and by tunnel to the Olympic Centennial Park, right across the street from it. So it's closest to where our attendees will be staying, but it's also the smallest of the 3 buildings. Each phase, they expanded larger and larger and larger. So Building A of the Georgia World Congress Center, which is the only building our attendees will ever have to walk into at any point. They don't even have to walk through Building B to get to Building A. The shuttle buses will drop them off at the doorway of Shuttle A. And if you're walking in, you'll walk in through the Omni and or the Omni tunnel from the street, and it takes you straight into Building A. So that's the whole experience for the show. The rest of the entire facility is dark. I don't even think there's another event taking place in the other 2 buildings, but if they are, they're far removed from us. Building A is also, since it's the smallest of the 3, we won't contain 100% of it. We are currently the only occupants of it. So we have it as our own private space unless something happens over the next 60 days, which is unlikely. But what we will occupy is, or what we will fill is about 2/3 of their breakout space. And we are going to occupy about 20 or 30% of the size of the exhibit hall, but of course, air walls pulled. So it'll feel warm, it'll feel connected, it'll feel right-sized for us because as the attendees are walking around, they won't even see all of the wings of breakout spaces that we've closed off that we're not using, and they won't see the big wings of exhibit halls that we're not using. It's going to feel warm and inviting. Nobody's going to have to walk once they get into the convention center any farther than they would walk in a hotel environment, less than Atlantis. And it's going to seem right-sized for us.
Okay. So it's not like they're going to have to walk. It's not going to be like a 30-minute walk into once you get to the building. The other thing is you mentioned the shuttle. So that's another question that people are asking. Is how are the shuttles going to work? Are they going to be a 1-to-1, so each hotel from the hotel directly to the convention center, or are they going to do a circuit hitting a number of hotels and then the convention center? And then the second part of that question is how often will they be running?
Okay. We are still determining if they're going to be A to B shuttles or ABC shuttles. But if they are multiple stop shuttles, there are only 2 remote hotels plus the Georgia World Congress Center. So either you're going to go Hilton, Westin, Georgia World Congress Center in a circle, or you're going to go Hilton, Georgia World, and then a separate line from the Westin to the Georgia World. So not sure which, but I can tell you that if for economics, because we would have to run a lot more shuttles potentially. If for economics we have to, if our budget forces us to do a multi-stop, you're only going to have, if you're staying at the Westin, you won't have any additional stops because you're closest to the Georgia World Congress Center. So you'll be A to B regardless. If you're staying at the Hilton, it's an extra 5 minutes. Pull over at the Westin, unload, offload, and keep right on moving. So I think everybody's going to be very pleased. If we had 4, 5, 6 hotels that were involved in shuttle stops, then I could see where that would be a real time drain.
Okay, and how often do you think they're going to run?
Oh, yes.
How often would you like
How
to see
often
them
are they going to run? Well, yes, right now the plan is to run them from 6 a.m. to 11 o'clock p.m., Monday, Tuesday, to run them from 6 a.m. until 8 o'clock p.m. on Wednesday because the show ends at 6, and on Sunday to run them from 9 o'clock a.m. to 11 o'clock p.m. So pretty much for the entire of the conference activity day, including the time you would need to make your way over for breakfast and for any time that you would stay in evening socials, and we've got many of those scheduled throughout the week, the shuttles would run there too. Now, our sponsor, Neat, one of our sponsors, is providing a conference-wide party. They've rented out one of the Atlanta hotspots called the Tabernacle. It's a converted church, but it's where they have all the bands and the private parties, and the C bands come and play and sell tickets. It's a really, really happening place, and they've rented it all out, and they're providing food and beverage free to all attendees who want to attend the party, plus the live band and the dancing. It's what T-Sheets has done in the past, but Neat has taken the mantle and run with it. We're so glad that they have. And that Tabernacle sits right between the Westin and the Georgia World Congress Center. So if you're staying at the Omni or the Westin, it's a 5-minute walk. And if you're staying at the Hilton, it's a 10-minute walk. But Neat on that night of that social, Monday night, will be running its own shuttle service from all 3 hotels to the Tabernacle for the party. And we'll cover all of this as folks register, and they begin to get our handbook and our conference app and the website. We'll be providing thicker and thicker details about all of this as we approach the conference.
And so, how often do you think they're going to be? It's not going to be like every half hour. You don't know that. It's just going to be they're going to start at 6 and then.
We want it to be. I'm sorry. I know I'm answering quickly. I apologize for cutting you off. It's our expectation that you will wait no longer than 30 minutes, but they will be on a schedule. So, every half hour they will pick up from your hotel, and you just go down there at the scheduled time and hop on the shuttle.
All right, fair enough. The other question that people are wondering is food options. I know that one of the things that was messaged to the exhibitors and the vendors in their vendor meeting last month was that the Hyatt had canceled the contract because you had told them you weren't going to be able to meet the food and beverage minimums. And so people are wondering if that's the case, what are the food options? Are you still planning on offering the breakfast that you usually do as well as lunch and then kind of the snacks in between? Because, people are just wondering, are they going to have to bring, are they going to have to pack because they're not in the same hotel. It's quite a hike. It's going to be at least an hour, probably almost 2 hours by the time they, get on the shuttle, go back to their hotel. If they forget something. So a lot of people are really concerned about what it is that they need to pack, and they're just wondering, should we plan on lunch outside of the conference? What's going on? So that's one of the questions that a lot of people are asking.
Well, and yes, and I should have clarified what I meant by that. What I was negotiating with the Hyatt was not the absence of food, it was different food. So at the prices of a Hyatt Regency, Hilton, Marriott at the JW level, Atlantis, Disney Coronado Springs, as you can imagine, the food is extremely expensive. In some venues, coffee alone is $150 a gallon. And to provide a hot lunch for attendees is typically around $60 to $70, sometimes $80 or $90, depending on the venue, per person per meal. So what I was negotiating with the Hyatt was not an absence of food. It was a different level of food.
Right. Nobody thinks
so that we could provide
that it was that. I mean, we understand that you weren't able
it was
to
not the absence
minimum,
of food.
but,
Right. Yeah,
right.
right. So the idea was I was renegotiating. Right. I'm going to answer your question too, but I want to get back to the original statement. So the Hyatt Regency, the original food and beverage minimum that was in our contract was $400,000 or $450,000 to feed the conference attendees, because we were going to provide that hot meal experience of the previous years. So we were trying to negotiate with them to say, well, if we were to provide sort of a make your own sandwich and more of a continental breakfast, we think we could spend less than that. Can we break out of that food and beverage minimum? And by renegotiating it, we could have met the requirements of the Hyatt contract and we'd still be at the Hyatt today. But they didn't want to do that. And that's the reason that we switched venues. Now, here's where I come up with really good news, Stacy. I'm not going to say that one day we might not still have a make your own sandwich, but the food and beverage pricing at the Georgia World Convention Center is 50% the cost of the food and beverage at the Hyatt Regency, allowing us to provide a food experience that's more like what our attendees have enjoyed in the past at the prices that fit our budget that we were trying to negotiate with the Hyatt. So this is a win-win. I get to spend at my new revised budget, and our attendees not only get all the meals they were promised, but they get them at or very close to the level of food experience from the past. This is a great outcome.
Okay. Fair enough. And I know that was a big deal. For those of us who, like me, it doesn't really matter because I'm like high maintenance and I'm dairy-free and gluten-free, so I wouldn't be able to eat anything anyway, so it doesn't really matter. For those of you who have tickets, so I have to I'm one of those people who has to travel now with my food. I have to check all my bags because I have to pack food in addition to everything else.
Stacey, can I address that though? Because I want to address that because for years we have had special dietary options. If you have food allergies or religious reasons, now not just food preferences, please, because it's more expensive for us and we have to custom ship the food in to your audience, I'm saying. But if you have something like a gluten allergy or milk allergy, eggs or peanut allergy, or if you have religious dietary needs, then our attendee portal gives you the option to say that to us, to tell us that, and we will provide a custom meal for you that meets your dietary requirements. We've done that for years.
Right, and I know, but I'm just one of those people who it's just easier to just pack, because even though sometimes when you're at a conference, I have found that I have had adverse effects, even though it's supposed to be a dairy-free meal. I'm down for 2 days because it does have dairy in it, or it touched it. So I have a situation where I can't even have anything that's touched dairy, or else I'm out. I'm down for 2 days. So I appreciate that. I think it's great that you do that, but there's still some of us who it's just easier because we know what it is and we don't have to worry about it. But that's great. Good to hear that it's still the same breakfast, lunch, and the snacks that we have. For those people who have tickets and they have decided that they don't want to go or they can't go, I know this is an issue, and I've had a lot of people ask me about this. How do they transfer tickets if they sell their ticket or they want to give it away, or basically how do they transfer a ticket to another attendee if for some reason they're not going?
Yep. And this, by the way, this is a common practice. This is a common practice that happens every single year. Because unforeseen circumstances arise. So we've been dealing with transferred tickets, not just this year, but for pretty much the history of the show ever since we permitted that transfer of tickets. And this is the process. You find a buyer for your ticket or somebody you want to donate it to if it's somebody that otherwise couldn't afford to go and you want to help them out. However you want to transfer the ticket, you work the economics between you and the other advisor directly. Once you've found somebody who wants to buy your ticket, the money does not go through us. Any money exchanged is A to B, but both you and the person who is acquiring your ticket contacts us at info@woodard.com and tells us the arrangement. We put the two emails together. We transfer the ticket from one attendee to another, and we provide confirmation to the new attendee, give them their attendee portal login, set them up. It's really easy. Both parties send an email, and you're done.
Okay, fair enough. I just want to make an announcement that I have a 19-year-old cat. I know that there are some comments going on in the chat room. I do have a 19-year-old cat, and she's being very chatty tonight. So for those of you who can hear her, she's my little old lady, and she's really got a lot to say. So if you hear that meowing in the back, that's Ethel, my old lady cat. So just FYI. I want to say this, conference app. Is there going to be a conference app, and when will it be released?
Yes, there will be a conference app. As a matter of fact,
okay.
yes, there will be a conference app all the way up to the time of this call. I was working on the configuration of that conference app. You notice that your cat only does it while I'm talking. I think that she loves the sound of my voice.
She can't hear you. That's the thing, is she can't hear you.
Oh, okay. All right. Well, that made me feel good for a second. I had to work that. All right. But yeah, as a matter of fact, I was configuring the conference app and uploading our exhibitor and instructor records and everything into that conference app all the way up to the time of the meeting. I'm wearing a lot of hats over here right now, and it's actually been fun. The E-Myth says in order to grow your company to the level where you're working only on it and never in it, you have to give up the thing that is your first love and embrace a different job, which is called executive leadership. Well, I was operating in that mode for a long time, and now I get the joy, though I lack the strategic value for the short term. I get the joy of working in my business again, and I'm back to wearing the hat of conference app setup, method developer, and all these other cool things. So it's almost done, and we'll be publishing it. We've got a few more things we've got to upload into it, but it'll be published about 30 days prior to the start of the show. And it will have almost all the same features of the previous year's app. It'll have the activity feed, social feeds. The schedule will be in there. But this year, we're not promising, but we are trying very hard to embed our attendee portal into the conference app experience. This is the first year our attendee portal is mobile optimized. So if we can do that, then we don't have to have a separate schedule selection process within the app. That'll be, I know that's always been a frustration point for us and the attendees in the past. But to answer your question in a long-winded roundabout way, yes, and it will be available about 30 days prior to the event.
Okay, cool. So this is a question I ask you every year, and I'm going to ask it again because the majority of the pro advisors are women. I think the last time I asked someone from Intuit, the number was close to 65% of pro advisors, certified pro advisors, were women. And the last time I asked you this, your answer was that it was just too hard to find keynote caliber women. And I just find this really hard to believe. I don't think it's hard to find them. I think there has to be another reason. But just off the top of my head, I can think of a few people who would be really great female keynote speakers that I think would resonate and the audience would be really interested to hear. I mean, you've got Kathy Engelbert. She's the CEO of Deloitte. I think Joanne Berry, she's the CEO of the New York State Society of CPAs, would be interesting. Ariana Campbell from Boomer. She's also, I believe, she's like Lean Six Sigma. She's like a black belt. Cece Morgan would be interesting. Shit, I would even love to see Juliet from AIF, the one who won the Firm of the Future last year for Intuit. So I feel like I ask this every year because it's always such a disappointment seeing your keynote speakers because there are never any women. Why are there never any female keynote speakers, Joe?
All right. So first, thank you for that. And we have received similar feedback, though I want to push back on the never any because we have every single year for the last 4 years. I think actually since the inception of the show, we've had at least one. Last year we had 3, 4 if you count my daughter, but I'm going to go with 3. And we opened up with one, a very powerful one last year. So, but let me say that we have heard the feedback that even though there are female presenters on the main stage, that it's not a strong enough representation. And there are 2 things I want to comment on this. One, I don't place anyone on the main stage by virtue alone of their gender. But I do place people on the main stage with consideration of their gender. So in other words, I'm not going to give preferential treatment to a man just because they're a man. Yeah.
And I want to say this, maybe that's an issue. Maybe you should be seeking out specifically because they are women. That may be part of the problem.
Let me follow up to that. Let me finish the thought, though. Let me finish the thought. So I'm not going to place somebody on the main stage solely, and I want you to catch the word solely, because of their gender. If there's someone who is more qualified to present the content than somebody else, then I'm not as concerned about their gender as I am their knowledge and their ability to provide value to the audience. However, gender is a strong consideration for us at Scaling New Heights, and it is a strong consideration for two reasons. One reason is the accounting industry needs to have its female and minority leaders highlighted because of the fact that it is behind the curve demographically on leadership in women and minorities. And I think that it's an inspiration to the community to see other people in those minority positions of leadership have the spotlight and to share their views. The second reason it's a strong consideration is because of relatability. And yes, that there is still that same 35% that's male, but they have plenty of relatability on the main stage already. But if there's a relatability level, whether it's minority to minority or female to female, but the majority of our audience is not minority in race, but is female, then I need to make that an extremely strong consideration. So without sacrificing the educational quality, we make that a consideration. So this year, you're going to see an increase in the presence of both women and minorities from the main stage, including Alessandra, who is the CEO of Abacus, Ciorige, who is one of the executives at Intuit.
But let me ask this about the Abacus. A lot of the keynotes are pay to play. Mm-hmm. They pay to get their keynote. Is that a pay to play one? Because then it just turns into an infomercial. That's what the audience feels like.
Well, no, it's not. Well, the audience may feel like it's an infomercial, but that's the other feedback we received in 2014, and we've made it very clear to the folks who do help to sponsor our main stage experience. And it's not that they pay to open their mouths. They're still screened. I don't let people up onto the main stage unless they have something meaningful to share. And we've gotten tighter and tighter about that. But let me kind of finish it out. But the point isn't that they pay in order to get 10 minutes and they can do whatever they want to with it. They have to fold into the educational story. They have to qualify to be up there. They have to have something meaningful to say. And what they're doing is they're covering a lot of the cost of bringing in other presenters to the main stage that cost money in order to get them there. So it's providing education, whether it's coming directly from them or from the other instructors. But I don't want to diminish Alessandra's presence within the space, her knowledge.
Then why is she not up on your?
Then
if you don't want to diminish her, then why is she not listed? You only have Steve Forbes. You only have a couple of dudes up on your website.
Okay, so we have featured main stage.
I didn't know you had any. Yeah, I didn't know you had any female keynote speakers this year. Well, right now, it looks like you have two dudes. That's what's up on your website.
Yes. Yeah. First, there is an incomplete list because we're constantly building out the instructor list as we go. In some ways, that's constrained by whether or not we have the bios from folks. Second, we're talking about featured main stage presenters, and then what section is pending on our site is the additional or not additional, just main stage presenters. So when we're talking about featured, I'm flying Steve Forbes. Steve Forbes is Steve Forbes, right? Obviously, he's featured. I'm flying Daniel Susskind, who's a consultant to the UK government on matters related to technology change, all the way from England. He's a featured main stage presenter. But what is not yet published on our website are all of the other main stage presenters. So I could see how you could get that impression. But obviously, we're not just three presenters. So you have Alessandra. She is a presenter, and she is an extremely strong leader within the accounting community. You have a Rige, who is an executive at Intuit. She'll be carrying a major Intuit presentation this year. Last year, she joined Rich with his. This year, she'll have her own presentation. We, too, would love to have CeCe Morgan at Scaling New Heights. And I asked again of Intuit if she could join us, and I fully respect their answer. But their answer is that the interests of the accounting community are already covered with Rich Priest and Arija's presentations, and they don't feel that the audience of Scaling New Heights, since it's a technology and pro advisor audience, that enough of them are going to relate to a simple tax message, a professional tax message. So they did pursue the idea of CeCe Morgan, but Intuit made a decision, which I think is a wise one, given their interest in their communications, to not bring CeCe to the event. But we did ask. We did seek her out. We will be replacing CeCe.
Can I tell you something? I would be much more interested in attending and going to the keynotes if I saw Arija's name up on your homepage. I really don't care about Steve Forbes. That's me personally. There's
right.
not really much that I'm really interested in hearing. What he has to say probably isn't going to pertain all that much to what I'm doing in my practice, but what Arij has to say, I'm going to be hanging on every word. These are pro advisors that you're talking to. And so and I think I represent quite a few females. So I'm just saying, maybe put that up on your website as soon as possible so people can see that. Because until I talked to you and unless I asked you, I wouldn't have known. So I get it that you guys
I understand that. I understand that.
Yeah, and I appreciate it. And I want to, I get it. You guys you do have female.
Well, and I'm not done. I've got more. I've got more in terms of female. I don't have them up on the website. Well, yes, you're right. We still are. And the reason is we just now finalized the lineup of our main stage to the point where we added the last 3 presenters just this week. So Steve Forbes, Daniel Suskin, and our keynotes have been slated for the show going all the way back for a year. So once we finalize the rest of the lineup for the main stage, then we finish out the rest of the main stage speakers on the website. We just got the word from Intuit 2 days ago about the CeCe Morgan decision. So rather than having too much fluctuation, we finalize, then we publish, and we'll be publishing the rest of the main stage instructors next week. So I get the impression it created, and I appreciate the opportunity that you're giving me to clear it up. But I want to keep clearing it up by letting you know that when we couldn't get CeCe Morgan as an additional keynote presenter, and it would have been a little strong on the Intuit presence anyway, because you had Arij, you had Rich, and you had Matt Rissell, who is representing T-Sheets, which is an Intuit company now. So it would have been a little heavy on Intuit. So instead, there's an extremely. Wait a minute, hold on just a second. Well, yeah, we are all pro advisors, but we also have lives that are beyond the Intuit corporation. I mean, Intuit's core to our business, but we have other matters too that we address with our clients. So to try to create a balanced main stage, we do have a replacement for CeCe lined up, but I do not have a statement of work with the person yet. So until that statement of work's in, I cannot announce her. But it is it's someone that is extremely reputable within the space, and I think it's going to be a fantastic addition to the main stage, also female.
So I just
now,
so you know, I had 2 women. Wait. I feel like we're like beating this dead horse, and I have a lot of other questions, and I get it. Like, you have women that are coming on, and I appreciate it. But just so that you know, while we were talking, I had 3 people message me and say, literally, I have no interest in, I would love to see much more cutting edge women in the industry. So it's not just me. These are messages I'm getting while we're talking. Now, just as a follow-up, this is a listener who's listening right now. She wants to know, how do you screen that paid main stage content? What is the criteria that you use? You just said that you screen that. And I kind of want to move on. I don't want to, we get it. Like, you definitely are trying to get more women up there, and we appreciate that. And get a little bit more diversity. But as a follow-up, and this is, again, somebody who's listening right now, this question just came in, how do you screen that paid main stage content? What are the criteria that you use to screen that?
Yes, and I definitely want to get to that. I'm not going to go back to women because I think I made my point. It's going to be a very strong female presence this year, stronger than it's been in the past years. But I don't want to skip over the Latino presence because that's really important to us. So we launched the first ever bilingual effort in a QuickBooks-centric conference in Intuit's history. And Intuit's very excited about us doing that. Of course, the Latino community was. We had Spanish-speaking tracks, and we had translation into Spanish from interpreters that were working from a booth with headsets. This year, we are bringing a Latino practitioner panel to the main stage. And the panel just happens. Again, I don't force decide things based on gender, but when I was picking based on relevancy, relatability, and all the other criteria we talked about, there are 3 women practitioners and 1 male practitioner, all Latino, who are going to share what's happening. And it's extremely exciting what's happening in the Latino community. It's one of the fastest growing sectors within the accounting industry in the United States. And in the industry servicing its own community, that whole process is evolving, growing, thriving. So
Right.
We're going to get to hear from them, and they're going to present 2 things. They're going to present a perspective into what's happening in the Latino community, and they're going to present some of the challenges that are taking place within the Latino community, and how not only Latinos can address Latinos in helping them with that, but how everyone, all small business advisors, can help Latino-owned businesses to thrive. So I'm very, very excited. We're going to have a lot of diversity of gender and race. Now, and also we'll have, not for the first time, we've had.
I just hope we see more of it on the main stage. Right.
Well, they're on the main stage as well.
I just want to see more. Yeah, that's all. So, like,
and then I also want to get to the fact that, I know, and you want to get to the screen, but I'm so passionate about diversity. I've got to get this through too.
I know, but let's move on. I'm saying let's move on. I appreciate it, but we have a lot of stuff. So the question at hand is, how do you screen that paid main stage content? What is the criteria that you use to screen that content and those speakers? Yes.
So there are 3 things that we do. We start with encouraging the sponsor of the main stage, if they're not themselves someone that brings a lot of thought leadership into the space. So, for example, Bill.com with Renee Lacerte. Renee Lacerte's probably one of the biggest thought leaders within the space. They bring their own powerhouse, right? But if it's somebody that doesn't have a notoriety within the space, we encourage them to sponsor a thought leader within the space who can speak on a topic that accentuates the value of their product or offering on their behalf. So this year, Cloud Runner is sponsoring the involvement of Randy Johnston. First time Randy's ever been involved in our show, and we're thrilled to have him. And he's going to talk about the consulting opportunity around IT consulting. And then Canon is also sponsoring an event within the space rather than speaking on their own behalf. And they've done that for years with their Explorers of Light. But now they're going to be doing it with a special event that we'll be announcing in about a month. Very exciting. Okay. If they're not going to do that, if they want to speak, now let's get to the screening thing, because this is the 3-part, this is phase. Right. Then the second thing is, if they're going to speak themselves on their behalf, we tell them that they cannot mention their product until the very end in the very last sentence. So they know what they're signing up for. They have to present a topic around their area of expertise. So if I am a time tracking solution, I can speak to the importance of time measurements for accountability, fraud, you name it, and the importance of deploying those in a small business. But not until the very last 2 or 3 sentences can I say, and we would welcome you to come by our booth and explore blah, 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 blah. Thank you for having me. And off the stage they go. So that's been the criteria for the last 2 years, actually. In the third phase of screening, we don't just coach them on the front side. We actually go through their PowerPoint presentations. We cover what they're going to present, and we make sure it not only meets our criteria, but fits our theme. So somebody can't just get up and talk about some rogue aspect of the industry. It has to fit somehow into how do you leverage technology to create efficiencies, or how do you transcend technology to do what the machines cannot or ought not do. And everyone who signed up has agreed to play by those rules.
All right. Thank you. I appreciate that. So now I have a lot of pretty detailed questions, and most of these are coming from the QuickBooks community. We're all accounting professionals, and details are what we do for a living. So most of the next questions are that they have been sent directly to me over the last couple weeks. So I'm reading a lot of these because they were sent to me. So I just want to, and they're pretty long. Some of these can get a little lengthy. So one of the things was in the last interview, you said, the quote was, and that was in February, I realized, well, okay, there's no merger coming, there's no acquisition coming, there's no funding company coming. And then in the email that I sent to clarify that you had been in negotiations, you stated we were very close to combining with another company, and that acquisition/merger would have resolved our financial situations, which was one of their goals with the acquisition, speaking about the company you were going to merge or sell to. But you said that this fell through in February, prompting your Chapter 11 filing. You're also quoted by CPA Practice Advisor, I believe it's in March 19th or something, as saying no one other than Andrew Argue has made an offer to partner with us or acquire the show. So which is it? Either somebody was talking to you about merger acquisition or somebody wasn't, because you've said it. You said it 2 times to me, one verbally on my show, and 2 via email, and then you tell CPA Practice Advisor that no one other than Andrew Argue has made an offer to partner, merge, or to buy the show. So it can't be both. Which one is it?
Well, it can be both if you finish the sentence. So the exact sentence to CPA Practice Advisor was, since filing the Chapter 11, no one other than Andrew Argue has made an offer to acquire the show or the company. And that is true.
Okay. So you were selling, you were trying to sell or merge with someone, partner up with someone.
I was trying to merge with a company, which by the way would have made an amazing event if it had taken place. It was a shame that it didn't go through. But my exact quote to CPA Practice Advisor, since filing the Chapter 11, no one other than Andrew Argue has made an offer to acquire the company or the show.
Okay, fair enough. And I honestly I don't see that in the article. I'm looking at the article and I don't see it in there.
Yeah, it is in my email to Gail Perry. So it just didn't get fully quoted in the article. I appreciate you pointing that out. We need to get to Gail and have her pull the actual statement from my email to her.
Yeah, because there's a lot of, and that's really splitting hairs. Like somebody just sent me a message like that, splitting hairs about that. And they said, this is the exact message that just came in. Why is he splitting technical hairs? I feel like he's hiding something that we might benefit from knowing, is the exact message. And I feel like this is... No,
I'm not trying to hide anything. I'm just trying to be accurate. The response I was making, the reason for the specificity there is it had nothing to do with the since the 11 or not since the 11. Of course, I was very clear on the show that we were seeking acquisition and had gotten down to the final stages of an acquisition all the way into the middle of February. And we had really wanted that to go through. But so there's nothing to hide there. That's the truth. What was also the truth is that Andrew Argue made an offer to buy the show. But what I was responding to, and I had to be extremely definitive in my response, is, there was a lot of questions. Is he still willing to do this? And then there was a splitting of the hairs thing. Because I said, I'm not presently looking at any options with Andrew Argue. I had disqualified that. And then people came back, what do you mean by presently? Right? So I'm like, okay, let me be very clear. Not now or at any time in the future am I looking for an acquisition from Andrew Argue. So a lot of the specificity and the splitting of hairs, I'm not even going to come back with my answers, are all based on the fact that, people are wanting clarifications, and I'm happy to give them. So I could not, of course, say, because then Gail's follow-up question is, well, has anybody else besides Andrew Argue tried to acquire the company? And I was like, no. Since filing the Chapter 11, no one else has made an offer. To be clear, right? Because somebody did make an offer all the way up to February, but her question wasn't ever. Her question was, in addition to Andrew argue within the context of the 11.
Gail just posted it in the chat. Joe, Gail just posted in the chat. She copy and pasted it. Are there any potential? She says that she's offended that he's blaming this on me. I quoted him exactly. It's in the show chat right now.
I wasn't trying to blame it. It was just a grab of the quote.
Are there other potential partners that you're talking with regarding co-sponsorship or acquisition? No one other than Andrew Argue has made an offer to partner with us or acquire the show. She copy and pasted the email in the chat.
Yeah.
So what you said.
Yeah, because I'm not presently talking with anyone. It was a present tense question. Yeah. So for apologies to Gail. The problem was the answer rather than the question. So the nature of the question is, are you talking with anybody else right now about an acquisition? No, other than Andrew Argue, no one has made an offer to buy the show, meaning that I'm not presently in any conversation. So I think a lot of this is just about context, Gail. I did not mean to say you were doing something untoward. I just thought it was a copy paste error. Please don't be offended. But now when I understand the context, right, I didn't have the exact article in front of me. She was asking a question about the present. I was answering a question about the present. The answer about the past is still accurate. Up to February 25th or whatever the date was, mid-February, we were very close to an acquisition. When that failed, Andrew Argue came post-bankruptcy and tried to make an offer. Right. I rejected it. And then Gail's question is, are you talking to anybody else? And my answer was, no, no one else has made an offer to acquire Woodard or the conference. It's a very present conversation. Does that make sense? Mm-hmm.
It does, but it reads as though no one has ever made an offer. I mean, that's what your answer states, and that's how it reads. I'm glad we have the opportunity to clear
that up. Yeah, right.
Yeah.
Of course, there was no way. There was no way first that I would lie. Second, no way that I would say that, knowing that it was public, that I was in the middle of an acquisition. So it was obviously just a context problem.
Okay. So the other thing is that in that email to me, you stated that one of the goals of the merger company was to resolve the financial situation for Woodard Events. So this is one that a lot of accountants have a problem with because what they want to know is they want you to explain how taking on approximately 2.9 or 2.2 or whatever it is $1 million in debt, whatever is listed in your Chapter 11, would be a goal for any company looking to acquire another. I mean, I had that come at me from a few different people because we're accountants. And so it's very hard to believe that any company is saying, okay, one of the goals in this merger is for us to take on your $2 or $3 million in debt. So the question is, can you explain why this would be a goal for any company looking to take on another or acquire another company?
Yeah, it's very easy to explain. They were not buying my debt. Most companies would never buy another company's debt. What they had done is they had valued my company at a valuation that would have satisfied the needs of my creditors. So meaning that they would have taken the proceeds from the sale of the business and they would have paid at closing, paid the creditors the agreed amounts to them first, and then they would have taken any other proceeds, and if proceeds existed, and they would have given them to me. Now, because of the size of the debt and the valuation of my company, there wouldn't have been anything coming to me, right? I would have been taking all the proceeds from the sale and giving those to my creditors at closing. Right. But that's the nature of the transaction. Then they would have been buying all of my assets. And the way these acquisitions take place, they don't buy companies. Most companies don't buy companies. Most companies buy assets. So they would have bought the assets of the Woodard brand, the Woodard programs, the Woodard systems, the Woodard's audience, the Woodard's reputation in the space, so forth. Then this is just intriguing stuff that I didn't know before I went through it. Then I would have dissolved my company. So once all the creditors are taken care of, the very next step is for me to dissolve my company. It goes out of business. And then the acquiring company that bought all my assets rehires me and all of my people and then signs a new lease with the person at Woodard Properties that owns my condo units, and we're back up and running. So it's just, and it's a way of creating a clear line. But the bottom line answer is, in the purchase of the assets of Woodard companies, there was enough of a valuation to satisfy the needs of my creditors.
All right. Well, that's different than one of their goals in merging it would be satisfying your debts. I mean, honestly, that was just a weird way to phrase it. So I think that's why.
Well, it was one of their goals. It was one of their goals, meaning that they could create an unburdened
you have to
organization.
Admit that's a weird way to phrase that. Yeah, but you have to admit that saying one of their goals.
Okay, maybe not a strategic goal.
It comes across as a little goofy. Yeah, it's just a weird way to phrase it.
Right.
Okay.
One of their intentions.
So
Let's change goal to intention.
Right.
Then we're good to go.
Right. The other thing is that, and this is kind of a follow-up another message that I just got here. And this is kind of following up to what the next question I actually have is, and that is, let me see where to go. Sorry, hold on. There's so many questions that I got sent about this. So in the interview, you told us that the conference, Scaling New Heights, had been built off of the profits of the consulting business as well as National Advisor Network, and that one of the catalysts for the Chapter 11 filing was a $4 million contract for Woodard Consulting that ended up coming in as $1 million. And I don't have the exact quote, but I do know that it was right about 10 or 15 minutes into the last interview. And then in the email follow-up, you stated, our design was to use the projected profits from future programs to pay down past debts, which, okay, that's fair enough. In other words, bootstrapping or reinvesting the profits of the company to retire debt. This might have worked had we maintained high enough profits, and more importantly, if I hadn't used those profits to prop up my consulting practice. Everyone is really confused about this because this is very circular, and these two transactions are in direct opposition.
Well, it depends on which timetable.
Wait. I let you finish, so I want to ask you this. So was Woodard Consulting Incorporated, was Woodard Consulting Inc. providing operating capital to Woodard Events LLC, or was Woodard Events LLC propping up the consulting company? Which was it? Because in the interview you say that it was one, and then in an email you say it's the other. So which is it?
Yeah, and by the way, thank you so much for giving me these opportunities to clarify, because I was trying to summarize about 10-year history, 15-year history of my company, 10-year history of my conference in an hour, right? So, and these are fair questions. So it depends on the timetable you were talking about. In 2009, 10, 11, we were launching the conference called Scaling New Heights. At that time, the corporation, Woodard Consulting Group, Inc., didn't even exist. It was a company called Creative Financial Software. So when I say my consulting practice, my pro advisor practice, it was called Creative Financial Software, Inc. And so the breadwinner kind of in the Woodard product line, there was no separate events company or anything like that. That was founded in 2012, was the consulting practice. And I was off doing training for Intuit too and things like that, hitting the road on that. And so I had Intuit contracts that were also part of that consulting practice. And it paid the bills for Scaling New Heights 2009, 10, and 11 until the show could break into a break-even mode and then into a profitable model. But as the show began to grow, and as my advisor-to-advisor practice began to grow, I made a really critical mistake. I should have at that point stopped doing SMB consulting because my interests were divided, and I couldn't get focus like I needed to on the SMB consulting division. And because of that, and because of also some other things that happened that were unforeseen, Woodard Consulting Group, Inc., which we founded around the year 2010 or 2011, it's to take over Creative Financial Software, Inc.'s activities, kind of a name change reincorporation thing. And it had a lot of promise, showed a lot of promise, but it just never really hit the mark. So the scales flipped, and Woodard Events now that existed as of 2012, and its show Scaling New Heights began to subsidize the interest of Woodard Consulting. So it was a flip flop, on which division was
And
profitable
here's
at
what
what
people
point in
don't
my history.
understand. This is the other question that people have about that is what kind of, I mean, it's a consulting business. Most consulting businesses, it's an industry. Consulting is a business that doesn't have a lot of overhead. So what people are wondering is, what were you doing with the consulting company that it needed to be propped up? That was the other question. That's kind of like my follow-up.
Yeah, well, yeah, and that's a great question. So around the time where it needed to be propped up, we were trying to expand it, and it was using those monies to expand its interest, which included getting Class A space down in Atlanta. We were wooing major clients that, since we didn't get them, I can tell you some of their names, like Auto Trader. And we were really leaning into this industry. We're trying to go up market. We had also picked up some consulting on some new products that had hit the space, and unfortunately, those models and the architecture of some of those products that we were working in didn't give us a stable platform to consult on. So that ran us into some brick walls. But the way we built up the debt was expansion capital, really high-priced rent, which we had to ride that lease out because we didn't get the consulting projects that were teed up, and also, again, the platform that we were developing on ran us into just brick walls. And so we had those kind of downfalls.
I mean, where was the rent?
And then I carried, and then
the
biggest cost of any consulting practice is human resource cost. And I had this dream team of consulting, very high-powered consultants that I didn't want to let go. I didn't want to lose them. And I just, like I talked about at the beginning, I held on too long to the team, as well as the space, as well as the investment in the expansion of the company, marketing, brand, everything else. I leaned in when I should have leaned back. And that caused the company to build up. Now, not the entire amount of the debt. I didn't build up millions of dollars worth of debt off that. But it did leave me at the point where Creative Financial Software combined with Woodard Consulting Group, Inc., because they kind of ran in concert for a while. Together, I think they owe Woodard Events right now about $450,000. So it did contribute to the problem. But that's a multi-year buildup of cost.
Right. And so the question, too, there is, I mean, doesn't Woodard Properties, isn't that who Woodard Consulting and Woodard Events is paying the rent to?
Woodard Events pays rent to Woodard Properties LLC, yes. Their rent just covers the mortgage, property taxes, and maintenance on the condos.
You just said that the consulting company had high rent. You just said that the consulting company got into a high rent situation.
They weren't. Yeah, they weren't renting from Woodard Properties. Woodard Events was from Woodard Properties. Woodard Consulting had Class A space in downtown Atlanta.
Okay. So here's two other follow-up questions that just came in as well. It still begs the question about why would debt exist from past conferences? Why wouldn't attendee money and exhibitor money pay for the facilities? That's one part. And then there's another one if you want to go ahead and answer that question. This is what people are having a hard time wrapping their brain around is,
and they should.
Why is
they
there
should.
still so much debt from 4 years ago or 3 years ago?
Well,
so
there's just
why
one.
Wouldn't,
why there's so much in terms of amount. Yeah. Go ahead with your.
Right.
I thought you finished your question.
So the question is, that's the first one is why would the debt exist from past conferences, right? Why wouldn't your attendee money and your exhibitor money pay for the facilities? So I guess go ahead and answer that, and then we'll get to the next kind of follow-up.
Mm-hmm. Yeah. So there's only one trade vendor to whom I owe money for events that predate 2017. And 2017, I think we know from last time's call, was a massive and unforeseeable, unpredictable contractual downturn that created a catastrophic financial event. And so we put all of that into the catastrophic financial event bucket. But there is only one vendor that I had not paid for the production of Scaling New Heights prior to Scaling New Heights 2017.
For somebody who hasn't listened to the other one, what was that catastrophic event?
It was a contractual downturn where a contract that had been funded at $4.5 million was, to the much surprise of me and my enterprise level client, was reduced in its funding down to $1 million. And that was a lightning strike kind of situation. I mean, it was
Right,
really
and that was
in
for
the
the
bag that we
consulting
were going to
company,
have
right?
that revenue.
Right, and
No,
that
no,
was
that
for
was
the
a
consulting
consulting
company?
project. No, no, it was not. It was a consulting project for the events company. So,
Okay.
because the nature of the work, it was related to servicing accountants. So but the bottom line is that we, that was part of our operational projections. It was what we were banking on, and those kinds of catastrophic events happen in business. But since we were going in with a heavily produced show in 2017, that created this this problem where I spent from August all the way till February in capitalization mode. If you missed the first part of this, seeking private equity funding, bank funding, everywhere that I could look, and got very close to solving the problem through an acquisition that would have allowed us to continue our brand, our programs, and our operations under a larger organization, and it just didn't go through. So, and then the Chapter 11. So that's the quick summary of last time. But there's only one trade vendor that predates the 2017 show, and that's the Hyatt Regency New Orleans in 2015. We did have a very small version of the 2017 tsunami. Let's call it just a tidal wave versus a tsunami kind of comparison. And we were in a cash shortfall, and we went to the Hyatt Regency New Orleans and asked them, we have other options for seeking funding, but should we return to your property and do future events because we liked it and it was a good fit, would you be willing to convert this short-term debt to long-term debt? Now, you see this happen in business where vendors will partner with you, and especially businesses that don't have cash problems, in order to secure new business. And our business was amazing for any hotel that we deployed in. It brought millions of dollars worth of direct and indirect revenues. So they were gracious and worked with us to do that. And the amount that you see in the debt schedule that's listed in the bankruptcy petition is a fraction of the total amount that we owed them at the time that we restructured that debt. And had the 2017 catastrophic event not happened, we would have taken care of them at 100%, and we would have returned to that property in 2019. So.
Okay. So then the other question that just came in is, how could the company be valued for anywhere near $3 million if the cash flow situation over the last 7-8 years led that company to such a large deficit at the time of the filing of the bankruptcy? So that's people are wondering is how your company was valued that much if the cash flow situation over the last few years really didn't support it or doesn't seem to support it.
Well, and I can't get into the specifics of the actual economics of the acquisition, even though the acquirer is unnamed. There are certain elements, so levels of detail that are protected by the non-disclosure agreement. But when I can answer to that at the high level is the strategic value of the Woodard relationship, the Woodard brand, the Woodard relationships, plural, and our programs were worth it to the company that was seeking to acquire us.
Okay. Next question. Let me get over here and make sure. I'm trying to monitor the chat and deal with Facebook messages and all sorts of other stuff. Here's a question that actually somebody emailed me earlier today. How many paid registrations, not vendors, not pre-registration, registrants, but paid registrations? I know you said you had like 670 or 870, whatever you said last time on the show, people registered attendees. How many of those are paid registrants?
Yeah, so first, 100% of what I told you last month are paying registrants. Since last month, we have had a few cancel, which, by the way, we always have some cancel. We've had a few cancel, but we're talking a few, 15, something like that. We've had a few transfer. We've had 40 that have joined the conference since my last call with you. So, and to answer your question directly, they all are 100% paying. They're not pre-registrants. They're not commitments. They're not carried in our accounts receivable. They have paid the money.
Okay. So then here's where people are getting really detailed, and they're looking at every single document that is related to the Chapter 11. So this is really specific to that. I haven't spent too much time digging into these documents. So this is, I'm going to read this word for word because
no problem.
It's really detailed. So your statement of affairs submitted to the court on April 4th states a 2018 gross rev of $3,411, so $3,411, and 2017 gross revenue of $2,992,777.88, so $2.9 million. You submitted amended documents 5 days later that shows a 2018 gross revenue of over $329,000. I'm not going to get into the pennies, and a 2017 gross revenue of $3.5 million. Where did the additional $322,000 for 2018 and the additional $570,000 for 2017 come from? Here's the exact quote. I'm pretty sure my clients would fire me if there were discrepancies like this. As an accounting professional and QuickBooks consultant, I don't think this is that funny. I mean, this is a legitimate question. How were your books?
No. The reason I'm laughing is because there's absolutely no reason they would get fired, because they do it all the time too. Anytime you go to QuickBooks and you click that little button that says cash and accrual, you're doing the same thing. We originally submitted the schedules based on the accrual basis. And on the accrual basis, we earn the majority of our revenue over a 4-day period of time. We also incur the majority of our cost over a 4-day period of time. So my bankruptcy attorney, working, of course, in the interest of the trustee, felt like it was going to distort the financials. Usually accrual basis is more accurate, but when we're trying to work with operational projections, when we're trying to work with actual cash positions reconciling back, plus the fact that I file my tax returns on the cash basis, the decision was made between the original numbers and the amended numbers to report on the cash rather than the accrual basis.
All right, fair enough. Here's another question. Why wasn't, and this is one that just was messaged to me, why wasn't Disney listed as a creditor? You said no venues from former conferences were creditors.
Disney was a 2017 show.
Right, and you just said that no venues.
Prior to 2017, yeah. From prior to 2017,
okay.
Correct.
Okay.
That was our 2017 venue. That was also our 2013 venue, but we paid them in full in 2013.
Okay. So many people have seen the numbers that you're putting out there in all of those Chapter 11 public documents, and they are wondering how you were running a company with multi-million-dollar revenues and putting on a conference for whatever 1,200 people that are going to be there, and paying off $3 million debt with an average bank balance of $25,000. I don't know where they're getting this average, but that's the question.
Yeah, right. Well, and that may have been the average. The swings in cash
I
are
think what
volatile,
they're doing is probably taking that 31,000 from last time I asked you about. I think I asked you it in the email, probably, and then whatever is being posted currently. So it probably averages out to 25 grand.
Yeah, and that's what you're doing is you're looking through a very narrow lens, trying to survey an entire field, right? I mean, there's not a complete picture that happens there. What I can tell you is that the cash swings are volatile. And we have to try to regulate that as best we can across the G&A of 12 months. It presents its own cash flow challenge. But what I can tell you is the better landscape to look at, or the better way to see the landscape, is to look at overall revenues, overall cost, and overall profit and loss. And so, if you do that rather than average cash position, then you're going to see a better picture. Now, it's still not a great picture because obviously I had to file a Chapter 11, but it's a clearer picture.
Right, and there's a simple question too: is where's the money coming from? So people see that you didn't have any cash. So people are seeing that you took out what is it? Almost like $600,000 in pretty high interest loans last year between April and October. I mean, the court documents, right. I know this for a fact because I had this one sent to me many, many times. You took out two loans that were factoring future receivables. And then you had another one that I think was at 34% interest. So, and I think the three of them total about $600,000. So people are wondering, you took out all this high interest loan and you factored not once but twice, where is all of the money coming from? If that's gone, where is all of the money coming from to pay for this conference? Where is that coming from? Because you've already had, like, everybody's payments were due. The exhibitors payments were due. And I know there's going to be some stragglers. They were due the 28th of February. I mean, that's a simple question that everybody keeps asking. Where is the money coming from?
Yeah, where's the money coming from? And that's great. So first, I did turn to some alternative lending. The situation got really desperate. I had to regulate cash flow. I had to get myself through some of the front-end conference expenses of the 2017 show because the vendors were paid large percentages going in. And again, the event that I was counting on was this contractual upturn, and they weren't the only one, but they were the one that was I thought a sure lock, and it would have taken care of a lot of this alternative lending and fixed the whole problem. So it was supposed to be a short-term solution, not something I would recommend doing unless it's that or Chapter 11. So it was the precursor and hopefully the preventer of a Chapter 11. It didn't happen. So now past that, where's the money coming from? There's a clear answer to that that's also submitted into the bankruptcy documents. And I would encourage people to take a look at that. It details out all the revenues that are going to happen between now and February. It's a 12-month projection. So it runs between now all the way to February. It is cash basis, and therefore all of the cash outlay that's required to produce the show in June is detailed there. And if you look, of course, it gets really lean around June, but there's surplus rolling into June, which we're already accumulating and using to pay vendors, accumulating and or using to pay vendors. And the revenues that are going to take place between now and June are sufficient to support the production of the show between now and June. But it only worked under the condition that I streamlined my organization significantly, painfully. And we covered that. I would encourage people to go back and listen to the first interview where I detailed out the organizational changes I make, massive cuts to payroll, massive cuts to infrastructure, massive cuts to a lot of G&A. Then the second level of cut, and of course, my salary was a big piece of that. My take-home pay also got cut. So in addition to that, there are people that are going to comb over every dollar of this, and you might see my salary technically go up slightly. What you're not seeing is the combination of my entire compensation package, right? So just as you're looking at all these documents, I just want you to remember you're seeing pieces of puzzles, and I am always one email away. You don't have to wait till the next QBO show. Send an email to jwoodard@woodard.com. I'll answer any question that you have, clarify anything, because I'm hiding nothing, and what's out there is out there. I'll either tell you and be embarrassed, or I'll tell you and clarify and be less embarrassed. But the bottom line is, if you look at the revenue, you look at the cost, two things are getting us through June. This significant streamlining of the organization. And the second thing that's getting us through June is the fact that we moved from a high-end resort hotel to an extremely affordable venue. But there's a third thing that's getting us through, and this is a key thing. We have built up very strong relationships over the years with trade vendors that are not included in the debt schedule. The goodwill that we've presented into the industry is immense. And there are some partners that have come alongside us and are offering significant discounts to us on the production of the 2017 show, either to maintain our business, because if they maintain the show, they maintain our business. And we're not talking about credit. We're talking about taking massive discounts in order to deliver a show through us to you guys. So they're our heroes. Or they're doing it to earn our business. But by example, the audio-visual experience that the attendees will enjoy this year will be very similar to what we had in our 2014, 2015 shows, but it's going to be 10% the price of what we paid in 2017. And that's a combination of some of the changes in the theatrical elements. There won't be any 35-foot, Yetis jumping out, running behind screens. But it's also the fact that these folks are making huge sacrifices to keep and or to earn my business.
Right.
So You take all those things combined, and we have ourselves a show.
Okay, so you mentioned a pay cut. I happen to notice, and this is another hard pill to swallow, and a couple other people have noticed this as well. You mentioned a pay cut, but just so you know, people are having a hard time with the fact that you've listed yourself personally as a creditor, owed $99,000 on those documents, those court documents. You realize that people look at that and they're like, you are in the situation that you're in because of choices that you made. Just like when I filed bankruptcy, I was in that situation because of choices that I made, compounded by external forces, right? So people have a really hard time seeing that you have yourself listed as a creditor for $99,000. You know, do you want to talk about where that money came from? And, you know,
absolutely. It's money that I loaned to the company, that the company either that I either paid for things on behalf of the company or wrote checks to the company and loaned that money into the organization to pay the bills. But in a bankruptcy, there are different classes of creditors. And based on the class of creditor you're paid either ahead of others or you're paid differently than others. So the reason for listing myself as the creditor was not to say that I want to somehow put my $99,000 ahead of Disney or ahead of a PSAV or ahead of somebody else. That was not the goal. The goal was to preserve it as an actual liability of the corporation so that when I do earn my way out of this Chapter 11, I can pay myself back without it being income. If I did not include it in the schedule and if I don't provide a proof of claim, the debt is washed away, and therefore I cannot pay myself that $100,000 back after everyone else is paid, tax deferred.
Okay. Here's a question in the chat. Why isn't there more of a surplus even now? Most attendee monies was probably captured already, and exhibitor money has also been captured by now. So why wouldn't you have a little bit more cash on hand?
Yeah, that's a great question. It's a fair question, and absolutely fair question, and it has an answer. There are two reasons my cash burn was so high between July, the end of the conference, all the way into February when the acquisition failed. One reason was the alternative lending that I secured. The alternative lending has usually a 6, 9, or 12-month term. I think most of mine had 9 or 12. And those are paid back out of the cash flows of the business. So as cash comes in, cash goes out. The alternative lenders were taking $3,500 per day out of operating capital per business day. And so that's some fun math to do. The other reason is because what I would normally have done in the fall of 2017, I would normally have streamlined the organization in the fall the way that I did late February. But the company
with
that
the
was seeking
with all those layoffs?
Right, with the layoffs and the infrastructure and G&A. So in other words, when I have a massive contractual downturn like that, I would have done what all businesses do. I would have streamlined my team significantly, and I would have weathered the storm that way. Payroll being, of course, the largest cost. Well, maybe it's not, of course. It's one of the largest costs. Conference production is a big one too, of course. But payroll is a massive cost for the company, 7-figure cost for the company, if memory serves. So I could have taken care of a lot of cash burn by streamlining the organization, but I did not do it because the company that was seeking to acquire me was very interested in the organization as a whole, the strategic value of not just me, my brand, but the strategic value of the team and the collective expertise of the entire team would have served a lot of the initiatives that they wanted to do under the new company. So I maintained that team, keeping myself primed for acquisition to very high cash cost. So debt retirement, and I hate to call it bloated infrastructure because they were my friends and they were doing amazing work, but infrastructure that I would not normally have maintained had I not been priming myself for acquisition, exhausted a tremendous amount of my cash.
Okay. That's 70 grand, or that's like 70 grand a month that you were paying back with the factoring, those 2 factoring loans and that other loan. That was 70 grand a month, right? I mean, am I doing that math right?
Yeah.
$3,500 a day?
Yeah, that seems pretty close.
So you realize that looks really desperate. I mean, I'm not trying to be a dick. I'm not trying
Well,
to
it
be
was
a total
desperate.
jerk
I
or
mean,
anything.
it doesn't look desperate, Stacey. It was desperate. We were in a bad situation. We had just taken a broadside hit to the tune of multiple millions of dollars, and we were doing whatever it took to keep things.
So talking to you today, here's what I can't quite wrap my brain around. It seems like you had to have known that this bankruptcy was looming, or something had to have been done before the middle of February. How could you? I mean, it seems like
the acquisition was extremely solid.
Okay, it just seems
the acquisition, the funding was coming. Yeah, I knew something was happening.
Something had to.
And so did my acquirer. We both knew. I mean, the acquirer was going into this eyes wide open. They knew exactly what was happening. But I had a big business problem. I had a certain runway to fix it. I was within my runway to fix it, and I had a solution. It wasn't until the solution fell through that I hit the end of the runway without a takeoff and filed a Chapter 11.
Okay. Well, okay. So then I have a couple questions, and then just a couple more short questions, and then a few more longer ones that kind of get into really the crux of why a lot of people were upset about this. So one of the questions is, why are you changing banking providers? I know that a couple of vendors have tried making payments, and they were notified that you guys were changing banking providers, is what they were told. So I'm just wondering what is going on with that, and how are you opening a new bank account while you're in the middle of Chapter 11?
Yeah, no problem. That's easily answered. It's required of me. Anytime that you go through a Chapter 11, you're required to open a brand new bank account. Sometimes they require 3. In my case, they just required 1. Sometimes there's a dedicated one for payroll and another one for, I can't remember what the second reason is, and there's a third one for operating. But in my case, they said it could all be done under a single account because we manage our payroll through ADP, and we're always current.
So you've got to open
it's a debtor in possession
account?
Yeah, debtor in possession account. Right. So I have to open up a brand new account. That's not optional. The reason I went with a different bank is because my current bank, Bank of America, does not offer debtor in possession accounts to small business or consumer customers, only their enterprise business customers. So we opened up a bank with United Community Bank. Now that required us to move our merchant providers around. But we had to change the deposit to account where those merchant providers were depositing monies. And maybe some of the folks that have said they experienced some sort of an issue, it could have been while we were in those transitions. But the United Community Bank is our debtor in possession account. It is a checking account like all other normal checking accounts that's managed by us. And it does have the merchant services accounts attached to it now. And then the next step in the process is to close the old accounts, which we'll be doing very soon.
Okay. This is my own personal question, and this is probably one of the only ones that I actually have, is what is the difference between Woodard Events LLC and National Advisor Network LLC, DBA Woodard Events?
Actually, there should never be
from the fact that they're 2 separate businesses.
Yeah. There is no such thing called National Advisor Network LLC, DBA Woodard Events. If that exists somewhere, it's a typo on some form or some place. Because National Advisor Network has never done business, then that's a typo in the court documents. It's not something that it has ever done business as. National Advisor Network LLC owns the asset called Woodard Network, which of course used to be called National Advisor Network. And National Advisor Network LLC operated up until around May of 2017 as its own, January 2017 as its own corporation, as its own P&L. Still has its own P&L, but it had its own G&A, it had its own employees. But starting January 1st, 2017, National Advisor Network LLC began leasing all of its operations to Woodard Events. So we did that just for a organizational consolidation, right? Had one payroll carrier that way.
No.
So
to give you an idea where this is coming from, it's in one of the court documents that somebody sent me, and it's listed as co-debtors. It says National Advisor Network LLC.
Oh, yeah,
DBA,
yeah.
Woodard
There's
Events.
a co-debtor. Yes. Well, first, the DBA, we need to fix that. Thanks for bringing that to my attention. Some either clerk at the courthouse or my attorney or something typed in something incorrectly, or I'll tell you what's most likely is a lender where National Advisor Network was a co-signer must have put that incorrectly on the loan documents, and I didn't catch it when I signed. But we can get that fixed. There is no DBA on National Advisor Network, DBA Woodard Events LLC. That is not an operational reality. That's a clerical error. But the reason they're listed is because certain loans that I took out were guaranteed by those corporations. Certain loans that I took out were also guaranteed by me personally. So I think I'm also in that schedule. And that's really all that schedule means.
So I want to say this. We're getting close to the 90-minute mark, and we're going to go a little bit past. And Joe, I want to thank you for sticking through for the 90 minutes. If anybody wants to finish listening live, you can listen when we're done with the show. You can go back and you can listen where you picked up, but you can also call in to listen even after it cuts off if you're listening via the web. You can call 917-932-1733 just to listen. But just a couple other questions, and these are the ones where I waited till the end because this is why everybody was so upset about this situation, and this is really kind of digging into that. One is the due date. So the due date for your sponsor payments was February 28th. The last day for refund for attendees, less the $50, was February 28th. You filed your Chapter 11 on March 1st. Many people in the community have come to me and said that they believe that you purposely waited until after that due date to file your Chapter 11, and it really bothers them that you did that you waited. Do you want to comment on that at all?
Yes, I would love to comment on that. And there were two things that factored into the timing. One thing was the timing of the failure of the acquisition factored in, right? And it takes time to prepare even an emergency Chapter 11. So, there was a lot of it was just when we got the paperwork done. But I will tell you, there was a consideration. Do we do this before or after the cancellation date? And I knew either way I went, I was going to make people angry. Because let's look at the other scenario. If I could have gotten the paperwork done fast enough, and by the way, I didn't. I got it done the day before we filed it. But if I could have gotten it done fast enough, and my attorney could have gotten it done fast enough, and we had filed the Chapter 11 on February the 25th, it would have meant that nobody after February 25th, or anybody that did file for a cancellation after February 25th, would have had their cancellation absorbed into the right. So what we did is we ran the bankruptcy all the way through. We made sure, this was the second consideration, that it ran through the date where we promised everyone you can get your money back less $50 administration fee if you don't want to come. So that everybody who did cancel all the way up to midnight on February 28th, I just mailed the refund checks yesterday, about $25,000 or $30,000 of them. And that's typical, by the way, because people sign up a year out. It's actually smaller than last year. But, that was all the people that had canceled in the days leading up to that February 28th date. So we were able to get them their money back. And that was their way of telling us we for reasons other than this bankruptcy, have decided that we don't want to come. So then the second thing was to protect the show in the interest of the people who told me by their inaction that they want to come. There was never a doubt in my mind, Stacy, that the show would go on. But I knew there would be doubts until I could stabilize the situation in other people's minds. And I knew that before I even knew that there was going to be a Cobb Galleria fiasco, right? I just knew there was going to be fear, uncertainty, and doubt in the marketplace. And what I knew I could never survive is a run on the bank. If that had happened, then the very outcome people would have feared would have been created by their fear. And I had to stabilize the situation, knowing that I'm going to produce an amazing show, knowing that I'm going to deliver what people told me they wanted, and knowing that they're going to be delighted when they get there. So there was the lesser of two evils scenario. Do I go before, or do I go after? And after was the best way for me to do right by the community.
Okay. And I understand they would have been unsecured debtors and they wouldn't have gotten, I get that. So you mentioned the Cobb Galleria, which is a nice segue into the next one. The email that you sent out announcing that the Cobb Galleria it was going to be at the Cobb Galleria states that, and we're going to cut off in a minute. You guys can all listen, 917-932-1733 if you want to call in, or you can wait till the show is done and finish up. It's just probably going to be a few more minutes. The email that you sent out states the reason that you were moving to the Cobb Galleria was breathing room, accessibility of training spaces, wider range of hotel options, and more affordable parking. In the sponsor meeting that you had on March 16th, you stated the reason that you moved from the Hyatt was because, and we mentioned this before, that you wouldn't be able to meet the food and beverage minimums, and they canceled the contract. So the question that everybody's wondering is, why not just state in the email that you were moving venues, that there was a contract? Why lie about it? I mean, because that's what people were upset,
Okay.
that it was a lie. You didn't move for better parking. You moved because there was a contract dispute, and people were really upset, and they felt betrayed.
Well, and they have a right to be, because that was handled very well. Okay, and that was handled very poorly. And I will challenge your lie statement, but what I will say is that it was handled very poorly, and I can see why people felt misled.
Well, was it the truth?
So
I mean, why challenge the lie statement? You didn't move because of those reasons.
I'm
a
challenge
the contract.
Well, let me speak to the lie statement then. The timing of our messaging was horrible. The nature of our messaging was horrible. We could not have botched the communications around our change of venue and the communications around our Chapter 11 any worse if we were trying to do damage to ourselves. And by botching the communications, in the communications timetable, in responding to some things that were taking place in terms of revealed events, and I'll get into the whole timeline of it, it created a massive amount of confusion. So what should have done, I should have communicated all of the information about the Chapter 11 and the venue change at the same time. Now, I would have still had the whole issue with the Cobb pulling its bid after we'd reserved it, and I could have dealt with that. But I should have said, we're filing for a Chapter 11. We tried to negotiate with the Hyatt for lower food and beverage. That failed. And as a result of that failure, and we were also behind on one deposit with the Hyatt Regency. It was a small one compared to the contract value, but we were that too. The fact that we were, we were kicked out of the Hyatt. We're filing a Chapter 11. We're moving into this other space. And by the way, this other space provides these awesome benefits. But what I got into, and this is a confession of me not responding well to the environment of that week. It's not an excuse. I woke up on Sunday night Monday morning to learn that at Sunday at 2:00 in the morning, ahead of the timetable that I expected, the Hyatt Regency had sent out an email to all the attendees saying that their guest rooms had been canceled. I thought I had more runway to fold that venue change into the larger messaging of the Chapter 11 and the other elements. So I responded poorly. Rather than saying at that point everything, both points of the conversation, I shot off the email that was just simply focused on the fact that this venue is better because of XYZ. I had it teed up. It was already in our system. I pushed the button on it thinking that a quick response was the best response, and it wasn't, because it came across just as you describe, with it being half the story. And there was nothing in that email that wasn't true. All those things were better about the Cobb Galleria. The parking cost is worse at the Georgia World Congress Center, okay? So we're going back to expensive parking. But the point is, the timing of it made it look like that was the only reason we were moving, because it was missing the other half of the story. By the time that I went public with the Chapter 11, and of course, by the time I went public with it, CPA Practice Advisor had done some great editorial work. Good for them. And they had found the petition before my timetable to discuss the petition, which I was waiting until after that first court meeting, which was the Monday after I sent my venue change email. So originally I wanted to wait till then, get some more facts, get some more documents into the bankruptcy. And then I was going to talk about the bankruptcy, the venue change, the Cobb Gallery, and all of it in one bed of messaging. But the Hyatt threw the timetable off. CPA practice advisor with no hard feelings to them at all. It's their job to do editorial work, but they accelerated my timetable. And I actually appreciate, Stacy, the fact that you had me on, because you allowed me to at least address both of those things at the same time and try to get the story completed out. But that was 4 days later, and I could see why people felt like that was off. Yeah.
Okay. And that's a long answer. I mean, I get it. You guys, I mean, basically, I'm just going to say it. It's my show. You fucked up. I mean, that's basically it. And
oh, yeah, we really messed up.
You would have.
Oh, it was horrible.
Yeah.
Horrible communication schedule. I mean, we couldn't have botched it worse, but it was
right.
It was just the time. Yeah. You heard the reasoning. We were reacting to things that were coming out in the market rather than telling the story the way we had prepared to tell the story. And it created a lot of confusion. Now, I would push back that I was lying. I wasn't lying, but I botched it up by telling the parts of the story piecemeal in a way that I had not planned. And when you get one part of a two-part story, it is an incomplete story. There's no doubt about that.
Yeah, I agree. It was not ideal. So this is a
no. It was a mess.
And yeah, it was a shit show. I'm not gonna. I mean, and I told you that. I think I told you that on the phone. It was a shit show. Like before we talked when you were on the show the last time. So this one is pretty personal because I didn't really have any emotions about this until I was told about this specific situation, and it really bothers me because I get real junkyard dog when I think people or I hear people are sort of saying things or throwing other people in our community under the bus. And I feel like you absolutely 100% did this. This is coming from me personally. So you stated, this is a community that you helped build, right? Like you were a very important part in building this ProAdvisor, this QuickBooks community. These people trusted you. They looked up to you. They were in my Facebook group and in other social media channels. They were expressing their confusion. They were expressing their frustration with what they considered to be lies. It was, if nothing else, a lie of omission, because you didn't tell them it was a contract dispute. You told them it was parking and better training spaces. They were very frustrated and very confused. They felt hurt. They felt taken advantage of. I mentioned this. With the fact that you waited until a day after the cancellation, and you said in your vendor meeting on the 16th that they were being vocal, and the exact quote is, because it makes them feel better. And the other thing that you said was that they were angry at something besides me, and I'm a great place to vent. That is not true. They were angry at you for the way that you communicated this and the way that you handled this. And I find it, I had no emotions about this until I heard that you had said this. And I'm just wondering, why would you dismiss these people who you have helped build this community that are such a great, it's a great community. We all come in and we help each other. Why would you dismiss their feelings as invalid like this and claim to your sponsors? You basically threw them under the bus to the sponsors, claiming that they're projecting this whatever misplaced anger at you. Why? What would possess you to do something like that? This was so bothersome to me. Like, what was that? They weren't angry at something else and you were not just a place event, and those were the words that you said, and that is so bothersome to me. And I'm just wondering, can you explain that? Do you have anything to say about that? I mean, I don't know if necessarily this is a question, other than maybe this is just my opinion about what you said. So, I mean, is there anything you could say to speak to that?
Yes, absolutely. I can speak to it, and I can say it was not what it's not your interpretation of what I was saying.
I heard the audio.
Let me tell you what
I heard it.
Well, I'm sure you did. That's why I said
Somebody sent
interpretation.
me the audio.
Of
I don't know how else you can interpret that. This just makes them feel better. They're angry at something besides me, and I'm a great place to vent. It wasn't taken out of context.
So let me tell you what was in my mind at the time I said it, and then you can see what I meant by interpretation. I'm not disputing the words came out of my mouth. Of course they came out of my mouth. I meant them, and I still mean them, but not in the way that you interpret it. So the interpretation of the words had nothing to do with generalization. If there's any person, any single individual that's listening to this right now, including you, Stacy, and you're personally offended, no. I need you to let me finish.
That's what you just said. It's my interpretation of your words.
No, that's not what I just said.
Finish.
No. Yeah, I need to finish addressing this. If you are listening to what I'm saying right now, if you're listening to what Stacy is saying right now, if this is the first time you've heard it or if you've heard it some other time, and you were personally offended thinking that I was talking about you, I almost certainly was not. What I was referring to is not that you shouldn't have legitimate concerns about me. I've come on this show twice, taken some very hard questions. I just extended an offer for you to email me any concerns that you have, and I would address those concerns respectfully, and I will address them thoroughly, and I will address them honestly. I've never addressed anything out that's not honest in both of these calls. I care very much about answering these questions, and most of the objections that are raised have an answer. Maybe that's not pretty. It's a messy financial situation. Was until the Chapter 11, stabilized now, but it's the point. It was a mess. So the point is, I was not saying to everyone who raised an objection for any reason whatsoever, or even to the majority of those, that they were just directing their anger at somebody else. The context of it is that when people have questions, when people are confused, when people have concerns, when people need clarifications, they are by nature very vocal because they're asking questions. They're raising objections. They're trying to get answers. And a lot of times that is focused not in negativity within them, but as on the negativity of the situation, right? It's a negative viewpoint or it can be interpreted negatively. Yeah. What I was saying to my sponsors is what's not as visible are the messages that we've been receiving.
You use those. I'm going to interrupt you for a second, and I'm going to say this wasn't about the interpretation. I didn't interpret it wrong. You specifically said it's not indicative of all the situation, and nobody is saying that you haven't answered the questions. That wasn't what anybody was upset about. What upset me personally is that you told your sponsors that the people who weren't being vocal about their frustration and their confusion and their anger about this weren't really mad at you. Those were your exact words. They were angry at something besides me, and I'm a great place to vent. When that was not the case. It wasn't about my interpretation of your words, Joe. You specifically said,
I didn't generalize. I didn't mean everybody in your community. Right. I did not mean everybody in your community. I didn't mean the majority of your community. I didn't mean if you're listening in on this show and you care enough to find out what the real answers are, I almost certainly was not referring to you. But in any environment, I don't care where it is, there is always somebody who's misdirecting anger, whether it's a church, whether it's a club, whether it's a social community group, it doesn't matter, right? So that's a nature of humanity for that to happen. What the point I was making to the sponsors was some of that is going on because it goes on in all of human existence, but the majority of what's going on are people having concerns, and people with concerns are more vocal. That's not a negative statement. It's just a truth. More vocal than those who aren't. And I wanted to let the sponsors know that the invisible current of positivity is less visible than the current of questions and concerns that they see in social circles. But if the interpretation of my statement is everybody who raised a concern, the majority of the people that raised a concern, that's not what I meant at all.
Well, I'm going to disagree. I mean, I'm just going to disagree that your interpretation, the context and the intent was pretty clear. You were trying to tell your sponsors that basically these people that are voicing their opinion, they're angry at something else besides me, and I'm a great place to vent. So that you shouldn't
You
really
have chosen
pay
to
attention
generalize,
that was,
and I was not generalizing. That's the difference, and we'll agree to disagree.
We will agree to disagree. So the last question, obviously it's in your best interest to make as big a profit as possible, right? So you can pay off those creditors. Yeah?
That's
so
correct.
This means cutting costs. What a lot of people want to know is, where are you making those cuts? And what are you doing to make sure that those cuts don't negatively affect the sponsor and the attendee experience? This is a big concern.
Yeah. So I've already addressed the first one. The two major cuts are in personnel and the theatrical and what I would call the highly produced elements of the past couple of Scaling New Heights. So we're pulling the Scaling New Heights experience to more in keeping with what you would have experienced, say, in Scaling 14 and the JW Marriott in San Antonio, or maybe Scaling New Heights 15, close to that, in what we were experienced at New Orleans. So if you felt like you got tremendous value out of your conference experience those 2 years, and those were two of the most highly rated shows in our history, that's where we are today. To some degree in terms of staff, but definitely in terms of production. I've already addressed the convention center and the difference in that those costs, and as well as how our vendors are helping us to create the same experience that people have had in the past in a way that helps us to keep the show moving forward. When it comes to the team, and I want to really address this one, the team that we have in place is amazing. The team we have in place is the same team that has done the majority of the work producing the show for the last couple of years, in some cases before then. Most, not all, but most of the people that I unfortunately had to let go as part of my organizational streamline were director level leaders. So the trade-off within the organization is I'm no longer working primarily on the business development, strategic relationships, forging new partnerships, and all the things that a strategic leader does. And I am working in the business, directly managing the same producers that produced Scaling New Heights, or did the majority of the work to produce Scaling New Heights, and our other programs like Woodard Institute, which saw no change in employee structure, and National Advisor Network. So that's the biggest change. Now, were there a couple of people that did legwork on the conference that are no longer here? You know, one of our directors did some of the legwork, but she also trained her team amazingly well. And our team put in systems that have automated and streamlined much of the operations of the company, allowing us to do more with fewer team members than we've done in the past. So this is what I want everybody to be very clear on. I want them to hear me on this. The same instructors that we had lined up before the bankruptcy are the instructors that we have lined up after the bankruptcy, with the exception of one who has some very serious health issues, and we are praying and hoping the best for her. It's the same team of instructors, delivering the same quality of content that they would have delivered before. We did remove some of the hand-holding style coaching that we've done, where we had them do run-throughs with us before they went into the breakouts. But we are coaching and providing support to anybody that's not presented the show before, and we're commissioning our veterans to bring their A game, and they're very capable of doing that. The main stage lineup is the best we have had in the history of the show, hands down, no doubt about it. We spoke about that a little bit earlier in the call, not just in diversity, but in the strength of information these folks are going to provide. Now IBM has joined us, and 2 IBM executives are going to be talking about IBM's future with blockchain and artificial intelligence, and they're going to be featuring Watson, who will be joining us on a main stage to take interviews, take an interview question or two from me, maybe some directed from the audience if we can swing it. So if you're concerned about the show, don't be. Veteran team producing an amazing show, which was largely produced at the time that a lot of the work had been done. and we just are carrying that to the finish line. An amazing venue, all-star lineup on the main stage, A game across the board. You're gonna love the show.
All right. So I do have a follow-up question. I know I said that was the last question, but you said less staff, which we also, a lot of us got an email about scholars. You sent an email out earlier, I think it was last week, about Scaling New Heights Scholars. So if you've been 2018 SNH Scholars was the email. So now hearing you say there's going to be less staff and thinking about this, your role as an SNH Scholar, as your schedule permits and upon request by your fellow attendees, provide guidance to new attendees during the conference. This kind of seems like you're asking, now knowing that there's going to be less staff, it's almost like, hey, we'll give you this special badge. Are you going to say, hey, if you're new, find somebody with a scholar badge so that we can sort of pick up the slack, or not we, but the people who were there who decided to participate in this program can sort of pick up the slack that normally a staff member would have been doing? Am I reading that wrong?
Let me address that in two ways. First, yeah, you're reading it wrong. The SNH Scholar Program this is not its first year. We launched the SNH Scholar Program last year, and that letter is worded almost exactly the same last year to this year. It was always our goal
last year.
At the request. Yeah, I don't know why you didn't get it last year, but I know last year. I know why.
Probably
because last
got rotated
year,
out of the Scholar Program.
Yeah, no. To last year, in order to qualify as an SNH Scholar, you had to also have attended a Woodard Institute course, one of our quarterly models. Now we're on a subscription model. You had to have attended at least one of those in the previous 2 years, and you had to have attended 5 out of the last 7 Scaling New Heights or something along those lines. This year, we wanted it to truly be SNH Scholars and not merge it with Institute Scholar activities. So now it's just, if you've gone to 5 out of the last 7 Scaling New Heights, whether you're an instructor or an attendee, then you qualify to be an SNH Scholar. But the wording of that letter is almost exactly the same as the previous year, and it's based on feedback we've received from new attendees in focus groups that they would love to meet some of the people that are more veteran, not just of our conference, but veteran within the space. It's one of the biggest values, and start to emulate some of those people. So by wearing an SNH Scholar badge, we're not asking you to do the work of a staff member of the conference. We are asking you, or encouraging you, to take the folks that are newer within the profession and mentor them a bit. Now, another thing I want to say to that, we have, however, received a tremendous number of offers from our veteran attendees and our Woodard Institute members and our Woodard Network members, where they're saying, we're here. We'll even skip the breakout sessions if you need us to work the show. You've meant a lot to us over the years. We want to come back and give back to you. We have told each of those people, thank you for your offer. We may seek your help before or after the show with some opening stuff or wrap up, but we do not want you to work the show while the show is going on.
They're offering to work for free.
Pay to come, work for free, and miss the breakouts because they just love Scaling New Heights so much. And we are telling them, thank you, but no thank you. We want you to experience Scaling New Heights. We want you to go to the breakouts. We want you to be part of the conference. We might use your support before. Now, the third thing that we are, that I want to say to address that, when you're at Scaling New Heights and you see these people in Scaling New Heights team shirts, always, every year, the majority of those people were professional event workers. They are not employees of Scaling New Heights. A couple of the people behind the reg desk, of course, a couple of people on the exhibit floor, and the people that are walking around with me, and the people in our booth represent our team. And then you had, before, when you had the director level, you had people walking around in coat and tie with the Woodard pin that were serving the role as directors. But the people that are room monitoring, the people that are checking you in at the conference, these are professional event staff workers that are deployed by companies that specialize in this. They are trained by us on the day before the show goes, so they know our audience, they know our process. They've never been employees. And the budget that you will see if you go into the bankruptcy petition includes, I believe we said around $40,000 in temporary staffing for 4 days. So we are fully staffed up. We appreciate all the offers that people have given us to help and to do so for free, but we want you to experience the show. We are good to go.
Okay, so just FYI, somebody has let me know that you may want to check your court filings because there are 4 documents that list National Advisor Network, LLC, DBA, Woodard Events. And if that's not a thing, then you might want to check those court documents. So our eagle eye accounting
we
people
will definitely do it.
Never miss a thing. And I want to thank you for, it's almost 2 hours. I want to thank you for coming on the show. I'm really sorry. I'm going to miss Scaling New Heights. I won't be there this year. But I just want to say thank you for coming on. I want to thank Neat for being our sponsors. Please go check out neat.com. And the last thing that I have to say is the same thing I say at the end of every show is... See you, Joe.
All right. Bye, Stacey. Thanks for having me on.
Thanks for coming. Bye-bye.